Yo, what's up, y'all? Well Squad Chris. So check this out. I want to talk to y'all today about how I adjusted my portfolio, my investment portfolio, right? So I'm going to give you the first version, which is like the dollar standard and how I seen things and how most people see things when they're investing or how they build out their portfolio versus since I got my software upgrade, aka Bitcoin, right? How I look at things now, right? So there's a major difference between how I look at my portfolio, what I own, what my net worth is, all that stuff, what I deem to be valuable. Things have shifted, right? How I view what investing is, taking on leverage, all that good stuff, how I view my home, all that cool stuff, right? Everything has shifted on the Bitcoin standard. So I'm going to give you the update on, the difference between the two. So let's get it started. So for the first part, the dollar standard. So this is how a lot of people view things. This is how, you're kind of taught to set up your portfolio and to run your finances, right? So on the bottom level of this triangle or of this pyramid, you have your house or your investments, and some people swap it. So some people, their largest investment is their house, their equity in their house, and then they'll have like a 401k or, an individual brokerage account, which would be their investments, or the opposite, where they'll rent where they live, and then the house, the house thing will be gone. They rent where they live, so their investment portfolio will be their biggest. Or even the third thing is like people invest majority in real estate. So these two bottom parts of this pyramid will just be, investments or whatever. So that's how usually people make up their portfolio, and that's how I used to do it too. My brokerage account and my rental properties made up these bottom two here, right? So the house I lived in, my other house, and all my rental properties. Well, yeah, and my other house. So three of the personal houses I had and my rental properties made up, plus my portfolio made up these two, right? So we had houses, rentals, stock portfolio, and crypto portfolio made up the bottom two, right? So I think a lot of people, like I said, a lot of people see it that way. A lot of people rock that way. That's how I used to rock too. Okay. And then the next part, when you go up to speculation, this would have been like my watches, right? I have a watch collection, which I used to consider them like an investment. It's speculative, but it was my investment, right? I'm buying them for one price. They're cheaper than the market value because it's hard to get these watches. So, I had like a 13, 14 watch collection. So the reason why they would even be valuable, the reason why you would even look into things like this is because the supply and the demand, right? So I don't know if it's still this way because I haven't bought a watch in like 2 years, 3 years. Ever since I got on the Bitcoin standard, I left that alone, right? Matter of fact, I gave away a lot of my watches. So the way that this works is you cannot walk into the Rolex store and just buy a watch, right? Maybe you can today, but I'm talking about back when I was doing it. You couldn't walk in and just buy like a Submariner, right? Or you can't just buy like a Day-Date. So you walk in and whatever they offered you, you basically take that, right? And then whoever your sales rep is, mine was a guy named Chris in Vegas, he'll hit you and be like, "Oh, we got these other watches in. Would you like one?" Right? And maybe it's a Sky Dweller or something like that. So that first buy is just kind of getting you in the door, and now they're offering you all this other cool stuff. Now, the reason why you would even walk in and buy the cool thing or walk in or buy whatever up front is because everyone else couldn't get it. So let's say you walk in and you're buying this watch, you're buying this Rolex for um, $20,000. When you go look up the market value on it, it's worth 35,000. It's selling 30 for 35,000 in the aftermarket, right? So of course, if you can buy something right now for 20, and it'll be worth 35. Of course, you're going to do that. Now, the problem is you can't get caught flipping the watch. You can't get in and sell it right away because then your sales rep is going to cut you off like, oh man, you're a flipper, right? So you gotta just buy it, hold it, and then maybe you can make some backdoor deals if you want to, swap some watches around if you want to, but mainly you're just holding them. You realize they're going to be hard to get for a while, so that's why you would do stuff like that, right? But think about how much speculating goes into that. Think about how much speculation is involved with that, right? You're hoping or you're thinking that one, like a big part of this entire strategy is you're hoping that Rolex won't just produce more of those watches, right? So if you got a Submariner and this, yeah, let's say you got a Submariner, you're just hoping that Rolex never opens up the floodgate and makes more of them. If they do, the value of your investment is down because why would somebody come buy it for you for more money when they could just go to the Rolex store, right? So that's speculating. But anyways, so that's the speculation thing. Another part of the speculation thing is storing your money in cars, right? So I know people say like, "Oh, cars are a bad investment, blah blah," but you can buy classic cars, you can buy old school cars, you can buy exotic cars that there's more supply than there is demand. I mean, there's more demand than there is the supply. So you get your hands on the right car, the value of it goes up, right? You'll get a Porsche, like let's say you go get like a GT3 or GT4, that thing's gonna hold its value, or it might even go up um, further than what you bought it for, right? So your cars and watches, that was here in my speculation stuff. So in the investments, we had the companies that I liked in the stock market. Maybe I think Tesla is going to do this, and that's what's going to allow them to grow, or Apple's going to do this, that's what's going to allow them to grow, or SPG, or dividend portfolios, or whatever. That was all an investment, right? Your houses or all of your real estate. Of course, you're hoping that's going to go up too, and you realize like, okay, it should go up because we have the inflation monster. It's going to push the real estate thing up, right? So this is where the whole concept of a diversified portfolio comes in because you're like, okay, well, if the real estate market takes a hit this year or it doesn't grow as fast, well, at least my stock portfolio grew, right? But in the stock portfolio, maybe the healthcare sector grew faster than the finance sector. You get what I'm saying? So you even want to split up the stocks amongst different sectors and different companies. Therefore, you don't, just ever get wiped out. So you're spending your time, or at least I was spending all my time trying to figure out where to store my money. So when I get money from, my businesses or whatever, then I'm like, okay, is it time to go get another rental? How is the real estate market overall doing? So maybe I can consider going to get another rental, right? Maybe do I want to get a rental in Houston, Texas, or do I want to go down to Ohio, right? Am I investing in this property for cash flow or for appreciation? Do I want to buy this house here and put it on Airbnb, or do I want to buy this house over here that probably won't appreciate as much, but it will cash flow right away? Do I want to go get a Section 8 house, right? So I was spending all my time learning about, the different strategy or kind of strategizing. Okay, half of my real estate portfolio, I want it to be focused on a majority of my real estate portfolio. I want it to be focused on cash flow. And then I'm a, get a little sprinkle here and a little sprinkle here for the appreciation, right? So, I had a house in Houston, Texas that I was putting on Airbnb. The first year of that house being on Airbnb, it made me like $66,000. This is a 300 and I bought the house for 370. I put like 30, 40K into it. So let's say like 410, right? Let's say I'm all in for 410 and then it brings me $60,000, right? Like that's amazing. That's impressive. But that's because Airbnb was hot, right? Travel was hot and we were coming out of the pandemic. We're coming out of the pandemic. Everybody wants to go outside and do everything. So of course, people are on Airbnb. They're taking trips. They're going from Atlanta to Houston, from Vegas to Houston, or whatever. Some people are finding me. Some people are finding my Airbnb, and then me and my boy OJ also got another Airbnb in the city. If you watch the Bit by Bit podcast, we talk about that too, right? So um, even in the like whole real estate thing, it was like kind of diversified, right? So you're thinking of, okay, I need some houses for cash flow, I need some for appreciation, right? And then I have my personal houses that I live in. So I got, a house here, a house there, and those are the personal houses. I don't even look to make money off of that because I'm not going to let a stranger come live in this house or that house because my family's there, so my kids go, stuff like that, right? So that's imagine everything I just told you. You're trying to keep track of this. You're trying to keep your records on this. You're trying to keep everything, keeping up with the market. All this stuff is going on. And that's just one sector of your portfolio, which is the real estate sector, right? So then you got your speculation, you got your cars, you got your watches. For me personally, I have my cars, have my watches. That was kind of like the speculation thing. The investments, I had crypto, right? So when I was into crypto, I'm like, all right, I want Bitcoin for this. It's my hedge against inflation. I want Ethereum because the Ethereum blockchain will allow people to build on top of this and it moves faster than Bitcoin. So blah blah blah. And then I want to throw some Avalanche in there, or I want to throw some Avalanche. So I would break it down into, okay, here are the blockchains I want to invest in. Here's my Solana position. Here's my Polymatic position. Here's my Avalanche position. Here's my uh, Ethereum position, right? So I have Bitcoin in one area, and then I have the blockchains over here, and then I have, okay, maybe let's get some gaming tokens, right? So boom, boom, boom. I'm splitting this all up. Okay, um, what are the gaming positions, right, that I'm in? And I would just go down. But mind you, I'm spending all day learning about this stuff. I'm spending all day looking for the opportunities, right? So I'm managing all this stuff myself, not the rental properties, but everything else I'm managing myself. I'm not telling somebody, hey, go find me a crypto token to invest in. I'm not telling somebody, hey, what do you think about this? What's coming next? I'm in the trenches doing the research myself. And then you have your savings at the very top. So ever since 1971, it's become like real, like common knowledge that you can't just keep your money in cash, right? If you keep your money in cash, then you're just losing money. So you're taught that early and you understand that early on. So what you end up doing is instead of saving money, you put it in one of these categories down here. You're either rolling that into the next real estate deal or you're rolling that into the investment part. Maybe you're throwing in the stock market. Maybe you're buying another watch to buy and hold. Maybe you're putting this into the next classic car that you find a hold of. But you know that you can't just let that money sit, right? Or else it's going to lose its value. You let that money sit, it's going to lose its value. So that's why the savings part of this is kind of like it's not encouraged to save. It doesn't make financial sense or mathematical sense for you to be saving money because you know inflation is going to drop the value of your dollar and hence why you got to go do all these other things, right? So that was the dollar standard. That's how I was moving, from the year 2010 all the way up until 2022. I'm moving like this on the dollar standard. Here's how I see my portfolio as I start to go deeper and deeper down into the Bitcoin rabbit hole, and I'm understanding everything, and I'm understanding actually the concept of money. So another thing I'll explain to you guys on this dollar standard is that think about this. You might be able to make money in real estate, right? You might be able to make money buying and holding some real estate or flipping real estate or getting on Airbnb. You're creating money doing those things, right? So you understand real estate, but you don't necessarily understand money itself. With the investments, maybe you're trading stocks, maybe you have buy and holds. Some of your buy and holds are long term growth plays, some of your buy and holds are dividend plays, right? I had a dividend portfolio that paid me $120,000 a year. So I'm like, all right, cool, right? And then still you're like, okay, I understand how to make money in the stock market, but I don't understand money. And a lot of you watching this, you have to ask yourself the same thing. Okay, I know how to trade, but does that mean I understand money? Because once you understand money, then you'll realize, like, man, we've been putting in a lot of time, energy, and effort to keep up with this, right? This portfolio. And reality, we're doing all this so we can get more dollars. And, the dollar isn't a good money. That's why we have to even do all these things. If we were on a system with sound money, we wouldn't have to do all this. You would get paid, and that would be the end of that. right? You get paid and just hold your money, right? You don't need to do this, and that because the value of your money isn't falling, right? If I put $5,000 away, whatever I can buy with $5,000 in 10 years, I'll be able to buy the same exact thing. So if my money isn't melting away, I don't need to go look for an investment, or I don't need to go speculate, doing this or doing that, or buying Lego sets and holding them long term because they're going to go up in value, or buying purses or buying watches because they're going to, go up in value. My money isn't losing its value, so I'm not in the rush to go find, a return on my investment. All right. So you're doing all these things to get more dollars, not realizing or not understanding that the dollar itself is the problem. Because the dollar is the problem, because the dollar is creating all these problems, you have to move like this. You got to have your portfolio. Your portfolio needs to be diversified. There's so many different sectors in the stock market. There's so many different methods of making money. How does one affect the other? How does the interest rate affect the real estate market? So every day you're just trying to stay up to date so you can outperform your ice cubes melting away, and you can outperform whatever your benchmark is, which for most people in the stock market, let's say it's the S&P 500. All right, so there's that. Now moving on to the next one. Now we have the Bitcoin standard, right? So now we have the Bitcoin standard. And when I say the Bitcoin standard, there's a book called the Bitcoin standard. I'm talking about me specifically. This is not how all Bitcoiners see things. This is not how everybody does it. I'm talking about me specifically, Chris Johnson, moving onto a Bitcoin standard. This is what makes sense to me in my mind, for my money, for my wealth, for my family. All right. So at the very bottom, and the biggest part, right, is your savings account. So notice on the other triangle, in the other portfolio, your savings was the smallest portion. But now over here on the Bitcoin standard, your savings is the biggest portion of your portfolio, right? If you were to call it a portfolio, your savings account is the biggest point, right? Now, what's the difference between a savings account and an investment? In investment, you're looking to return capital based on things that you see or foresee happening in the future. There's an exit price, right? There's exit. There's, hey, once this happens, I'm going to sell out. Once this thing completes, I'm going to sell out. Once this price hits this target, I'm going to get out of it, right? Or I need this to provide some type of cash flow, or whatever the case is. There's a purpose. When you're saving, you're just putting money away for the future, right? I don't know what I'm going to use it for. I don't know when I'm going to use it. A part of my discipline says get paid and put the money away, right? I'm putting the money away for the long term. Maybe I'm going to use this money to buy a ranch. Maybe I'm going to use this money to pay for my children's college. Maybe I'm just going to use this money, or use this savings as a method to protect myself from all the BS, right? So think about this. Bitcoin and money itself is insurance against the uncertainty of the future. I don't know what's going to happen tomorrow. And if something happens tomorrow, I need money to pay for it, right? If I have a medical emergency and I need to reach in my pocket, this is why we save our money. If, my child has this opportunity to go here, do this, this is why we save money. If I need to get private lessons for swimming, this is why we save money. If I need to buy a new home for the family to live in, this is why we save money. So Bitcoin's an insurance, or saving money itself. Bitcoin, saving money, whatever. Bitcoin is an insurance on the future. I don't know what tomorrow holds, but I need to be prepared for it, right? That's what a responsible adult does. Now, moving up from the Bitcoin, right, from the savings account. So Bitcoin is my savings account. So I don't need to go speculate with this company in the market and that company in the market when I just put my money in Bitcoin, right? Also, Bitcoin becomes the benchmark, right? So if you look at what the S&P 500 does, if you look at what the typical return of real estate does, you look at all these things, I'm not comparing whatever I'm looking for in an investment to those things, to the S&P 500, right? I'm comparing it to Bitcoin because I believe Bitcoin is the safest investment I can make or the safest saving technology, right? So if Bitcoin does, let's say I'm expecting it to do 50%, right? If it does 50% this year, and I'm looking into a stock and I'm thinking, okay, this company is doing this, they're innovating in this, and I think that stock is only going to return 30%. Why would I put my money into that stock? Right? If I do not think it's going to outgrow Bitcoin, why would I touch it? Does that make sense? Right? So Bitcoin is my benchmark. If I don't think it's going to outperform Bitcoin, I'm not touching it. Right? So with the investments, so for example, I'm very public about this. MicroStrategy, right? MicroStrategy. So it's Michael Saylor's company. They're a software solution company. What they do is they borrow money against their operation and they buy Bitcoin. And then they issue convertible bonds and they buy Bitcoin. They take out, or they sell shares of their company into the market, take that money, convert it into Bitcoin. So because they're leveraging up to buy more Bitcoin, you can expect the return to be greater than Bitcoin, right? So I'll put a little money into something like that, right? Or I believe Tesla at one point when it got cooked, it was getting cooked 2 years ago. Amazon was getting cooked 2 years ago. Buying in at those prices made those things good investments in my eyes, right? But for now, I'm just focused on MicroStrategy, right? So, an investment, I'm speculating, okay, this has to happen for this investment to work out. This needs to happen. This needs to happen. If it gets to this price point, I'm going to consider cutting some back. Maybe I'll take some of those profits, roll it right into my savings account, right? So you have your investments here. So notice I'm saying Bitcoin is a very large chunk of this whole thing, right? That's my savings account. And then you have investments on top. Now, above that, you have speculation. Now, you can still go speculate in things if you want to, but I would just say keep it small, right? Speculation is, like I said, I still have some of my watches. Some of my watches I haven't, I'm not gonna go sell them. I'm still expecting them to perform pretty well, right? So you can speculate in things. You can go, I don't know, I'm going to speculate on this, I'm going to speculate on that. Just do it responsibly, right? And then you notice that real estate is nowhere to be found, even though I own a few houses, right? So I sold off my rental properties. I still own personal houses. So I see real estate as just somewhere that I live. I see my house as somewhere that I live, right? So when I'm going to consider buying the next house, right? When it's time for me to consider buying my next house, I'm not saying, oh, I'm going to buy in this area because I think that the prices of houses in this area is going to go up because they're doing this here, they're doing that there, they're doing that. When you're looking for a home or you're looking for your investment, you're like, oh yeah, they're building a mall and then this city's going to get a new sports team and then there's a new shopping center coming, so therefore the value should go up. Now, when I buy a house or consider a house, I'm not thinking about the value of the house going up. I want to buy that house for the reasons that I want to buy that house. I want to be in a safe neighborhood. I want good schools around. I want low crime, right? And I want a cool house that fits my needs. I need a heated pool. I need extra rooms for the kids. I need this. I need that. That has nothing to do with speculating on the price of the house. Does that make sense? So, therefore, to me, my house is just somewhere I live, right? The price, if the value of the house goes up, it goes up. Goes down, goes down. I'm not calculating that in my portfolio. You see, this is outside the triangle. Why? Because if I live in this house and it fits all my needs, and the economy takes a turn and the value of the house goes down, the value of the house on paper goes down. I'm not looking at it like an investment, like, hey, I need to cut my losses right here. No, the house still provides everything I needed to provide. Is the school system good in this area? Yes. Okay, dope. That's why I moved here. The crime low in this area? Yes. Okay, dope. That's why I moved here. My pool's still heated? Yep, dope. That's why I moved here. I still got X amount of rooms. I still got X amount of bathrooms. Yes. So this is just a place I live, right? Now I say that because maybe the next place I live, I consider renting instead of buying, right? So on the Bitcoin standard, Bitcoin's going to do all the heavy lifting that I need it to do. I don't need to speculate on whether this house is going up or not. Therefore, I don't care if I go rent a spot in wherever for a year and go live there because I want to try something new. Because I'm not looking at it as wasted money. No, I'm just paying to, put a roof over my head and stay safe. That makes sense to y'all? So now when I calculate like my net worth, my internal calculations, I don't say, well, my house is worth this and that house is worth this and that house is worth this. I don't care. That's just a place to live. Hopefully I grow old in these homes and then my children live there. Right? I'm not looking at it like, oh, I'm speculating on the price to go up. Hopefully they build this or they build that. And then because the reason why I don't look at it like that is because it will go up in dollar terms, but it's going to go down in Bitcoin terms. Right? So if something's going down against Bitcoin, it's not growing. If it's not growing against Bitcoin, it's not growing. Example, my Las Vegas house. I bought that house for like 500,000 and some change. Now it's probably worth like 8. So if I were calculating that as an investment, I would say, oh yeah, I'm up 300K. But when we price that into Bitcoin, I'm not making any money, right? When we price that into Bitcoin, Bitcoin was 10K when I bought that house. So that house cost 53 Bitcoin, right? That house cost 53 Bitcoin. And now at 800,000 and Bitcoin's at 100K, now the house is only worth 8 Bitcoin. So it went from 53 Bitcoin down to 8 Bitcoin. 53 Bitcoin, 8 Bitcoin. The house is falling in value. But if I were on the dollar standard, it's going up in dollars. So I would think I'm making money, right? So I would say, yeah, my house is up. Well, yeah, if you measure it in this thing that they just keep making more of, but if you measure it into the greatest savings technology ever, the greatest money to ever be invented, right? If you measure it from there, it's going down, right? So I don't care. It's just the place I live. Because if I cared, then I would realize I'm losing money by living here. Let me go downgrade. Let me go move somewhere else so I can, add to my stat. No, man, I'm buying a house. I look at it like this. I look at real estate the same way, like where I live, my house. I look at it now like shoes. All right. So I know it sounds crazy, but think about this. Why did you buy the pair of shoes you're wearing right now? Right? So whatever pair of shoes you're wearing right now, unless you're in bed watching this or kicking back on the couch, you don't got no shoes on. But the shoes you wore today, why did you buy those shoes? Those are the same exact reasons why I will buy a personal house or live in my personal house. So what are the reasons why you bought your shoes? One, comfortable, right? Two, they're fly. Three, they do what they're supposed to do, which is protect your feet. So my house does what it's supposed to do. Does it protect me from the elements? Yes. Is my house fly? Yes. Right. Um, do I like my house? Yes. It's cool. All right. So the same reason. So that's how I look at it. And another thing with your shoes is you wear your shoes, you buy your shoes for those reasons, and then you wear them. And when you're walking around in your shoes every day, are you considering how much they're worth? Right? Do you go, oh, I spent 250 on these shoes. I wore them 10 times. I'm gonna go look at the used value of these shoes now. Oh man, these shoes are only worth 200, but I paid 250 for them. Oh, these shoes are only worth 100, but I paid 250 for them. You don't think about it like that for the shoe. So I stopped thinking like that. Stop thinking about that like that for the house. Right? Is my house up or down in dollars? I don't know. Is it up or down in Bitcoin? It's down. That's why I don't even count it, right? Because I know it's down. Because I know nothing's going to outgrow Bitcoin, right? So I hope that makes sense. I hope I don't sound too crazy when I say that, but that's how I look at it, right? I don't track the value of my shoes. I buy them because I like them. They do what they're supposed to do, and they look good. I buy my house because it looks good. It does what it's supposed to do, and I like it. All right. So that's where I live. Now, with that being said, consider this: if you're going to go buy your own personal house, and you're like, all right, this is just somewhere I live. I'm gonna spend my money on it. Cool, right? Or you go, actually, I don't even care if I'm the owner of this house. I just want to live here. That's also cool. But when you're on the dollar standard, you go, well, if you pay for your rent and then this happens and then the value of the property goes up and that equity could have been yours, then I would say, like, let's say if you was my homie, I would tell you, well, if you would have just took the down payment and put it in a Bitcoin, it would pay for the whole house already. Or if you were going to pay cash for the house and you put it in Bitcoin, the whole, instead of being able to buy one house, you would have been able to buy four or five. So think about when I said that my house in Las Vegas was 53 Bitcoin, and now it's worth 8 Bitcoin, right? So that means I could have bought, you know, five of those houses, six of those houses, right? Six times eight, 40, right? Or 48, sorry. Six times eight, 48, right? So I could have bought um, six of those houses now. With the money that I paid for one house, I could have bought 6 point something houses. 53 Bitcoin to 8 Bitcoin, right? So I hope that makes sense. So a house is just a place I live. The reason why I buy the house is the same reason I buy the shoes. It does what it's supposed to do. I'm not calculating that. All right. So just want to kind of give you guys a rundown. Okay. And then the next part is the last part I want to tell you about is the whole concept of Bitcoin only. So you guys remember when I was on the dollar standard, right? Or back when y'all met me, I probably used to say, get money by income, get money by income, get money by income. How do you get money? Whatever you do to get money, you do to get money. If you got to go flip a house, go flip a house. If you got to go work at your job, go work at your job. If you got to go trade stocks, go trade stocks. If you got to go do whatever you need to do to get the money. What I'm telling you about the buy income part is where you store your money. Now in Bitcoin, it's the same thing. So when I say Bitcoin only, right, I'm not saying, hey, don't have a job because you should be Bitcoin only. Why are you working as why are you working as a firefighter when you should just be Bitcoin only? That's not what I'm saying, right? I'm saying when you store your money, like everything's going to fall against Bitcoin. So it's the same thing. Get money by income, right? Get money, stack sats. Get money by Bitcoin, right? Make your money however you got to make your money. And when it comes to storing your money, Bitcoin's the best savings technology there is out there. So I don't want that to be confused because when somebody goes, oh, why would I buy Bitcoin when I could do X, Y, and Z? Why would I buy Bitcoin when I can trade crypto? That's almost like saying, why would I buy Bitcoin when I could be in the NFL? You're comparing creating the money to storing the money. And if you can't see the difference between creating money and storing money, you have some financial maturity to do, right? You have some financial maturing to do, right? So you can't say, "Oh, uh, yeah, why would I be this guy doesn't want me to be a firefighter because he says Bitcoin only." No, bro, you get your money from the fire department and you store it in Bitcoin and your life gets easier. There's making money and there's storing the money that you made. And that's when I say Bitcoin only. You're storing your money in the greatest savings technology. All right, I hope y'all learned something. This is my personal thing. So, I don't really care what y'all do. Do what you got to do. Just make sure you think it out. But this is my personal view on how things shifted from the dollar standard to the Bitcoin standard for me, for my life, for my family, and how I'm rocking out. All right, I'm out. Catch you on the Well Squad.